Be Wealthy and Smart, episode 1321.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about mortgage rates falling for the first time in 5 weeks. It looks like we're getting a little bit of a thaw in mortgage rates just in time for the spring home buying season. The 30-year fixed mortgage rate rose an average rate was about 6.88% as of March 7th, according to Freddie Mac, which is down 0.06% from the previous week. A year ago, the 30-year fixed rate interest rate was 6.73%. So we're just slightly higher above where we were a year ago, and the average rate on the 15-year mortgage was 6.22%, down from 6.26% last week. A year ago, the 15-year mortgage was at 5.95%. So we're a little over 0.25% higher than we were a year ago on the 15-year. Now, we're still expecting that mortgage rates are going to fall further in 2024, with the first Fed rate cut happening in May, is my belief, and mortgage rates being lower by the end of the year. The National Association of Realtors has put it in the low 6% range by their estimates at the end of 2024. And just with the small decline we've seen in mortgage rates last week, that caused nearly a 10% jump in mortgage applications, with people both looking to purchase homes and to refinance their mortgages. Housing inventory still remains tight, and home prices are elevated, but first-time buyers are very interested in buying something this spring. And we can tell that because FHA purchase applications jumped 16%. Now, the volatility in mortgage rates has been tracking broader indicators like the Personal Consumption Expenditure, or PCE, which is the Fed's preferred gauge for inflation, which was at a 2.8% year-over-year gain in January, which was the slowest growth since 2021. In Jerome Powell's testimony this week in Congress, he said rate cuts will likely happen sometime in 2024, even after January's hotter-than-expected inflation report. It sounds like we're getting closer to that period of time where rates are going to be cut, and again, my estimate is May. And today we're waiting for a jobs report to give us another estimate on how things are faring in the economy. Until we get a lower inflation number, we're getting a lot of rate volatility as speculation tends to move all over the place. But some of the jobs numbers I've seen indicate that there have been more tech layoffs, which are higher income jobs, and this is due to AI from what I'm hearing, and I think that's going to show us there's more weakness in the economy than was earlier expected. And that's what's going to allow interest rates to decline down to a 6% level, that with lower inflation confirmed by the Fed, and that will help consumer sentiment for both buyers and sellers, which will help thaw some of the frozen housing market. The number of home listings increased year over year for the 4th consecutive month in February. Active listings increased by 14.8% in February, moderating the supply challenge that's been really lacking in most real estate markets. Affordable homes, those listed between $200,000 and $350,000, grew almost 21% compared to a year ago, which is really nice that we're seeing more affordable homes. And some of that is coming from new construction, where the builders really like to focus on first-time buyers. So even though inflation came in a little bit hotter than expected in January, a lot of people think that we're going to have surprising deflation or disinflation due to technology, and that is going to bring interest rates down lower by the end of the year and into 2025. Not only is the National Association of Realtors predicting 6% rates by the end of 24, but into the 5% range by 2025. So this should really help the housing market. It will boost prices With limited inventory, we're going to see, I think, a crazy real estate market for the next couple of years. People who want to buy are going to be buying while interest rates are low, knowing that they may not stay low for very long. And with few people still wanting to sell because they don't want to give up their low interest rates, I think that's going to keep supply somewhat limited. And as we move into the spring season, that tends to be the best time for people to list property who are dealing with kids and school and things like that. More homes tend to come onto the market in the spring, and that could give us a more robust real estate market. As long as mortgage rates are declining and moving in the right direction, that's going to encourage buyers. And even that small decline in mortgage rates led to nearly a 10% jump in mortgage applications. So you can see how sensitive the market is to lower rates. With this also being an election year, we should be seeing lower rates soon. So if that first Fed rate cut happens in May, that could just be the kickoff to a lot more attractive real estate prices and sales. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more tips on your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.